Welcome to Lithium-ion Rocks, episode 27, Almost Famous Lithium 2.0. 2020 hindsight meets 2030 vision, and Lithium 3.0. The roaring 20s lithium are upon us. Broadcasting from Bull's Lair, Forest Hills, hometown of Paul Simon, who you just heard humming like a GMC electric Hummer. I'm a bit surprised that GM is using just LeBron James and not bringing back Arnold Schwarzenegger, given his fantastic used car salesman impersonation of Howard Kleiner.
Hello. Looking for a car? Hey. Howard Kleiner.
Oh, Howard
Good to see
Kleiner.
you, yeah. What are you looking for?
We're looking for, electric. Fuel efficient, quiet.
I have exactly what you're looking for. What do you think, huh? How about this, huh? Can a battery-powered car do this?
I think it's a piss off my neighbor.
You them right. It will impress your neighbors. This is testosterone. Yes.
Rodney and I begin this great decade with a recap of our year-end note. Will 2020 finally be the year for lithium? This podcast will be similar to our first podcast last year, where you're going to hear a bit of a monologue script from myself and also from Rodney. We also have a repeat guest, Garrett Fueling, had two or three more comments from our last very popular podcast that he wanted to interject. Rodney and I talked about the liquidity crunch in China as early as our first podcast in January last year, so that didn't come as a surprise, nor did the oversupply of spodumene last year, which we predicted. I held no spodumene-only producers except for Mineral Resources, which I knew was going to receive a big check from Albemarle, which turned out to be the most stable lithium stock of all that I track. My focus on the vertical integrated hard rock to hydroxide plays worked out well with Kidman, but less well with Nemaska, which I comment on a bit later. Among the advanced developers, Piedmont Lithium, another vertically integrated hard rock, was among the best performers, so was right about that one. And it continues to be among my favorites in the space. My caution about the political environment in Argentina was well placed, given Macri losing to Fernandez. I restricted my exposure in Argentina to producing companies Livent and Orocobre, with a small remnant position in Lithium Americas, expecting that 2019's visibility at Livent was as secure as Paul Graves indicated it would be in the IPO roadshow, and unfortunately, I was disappointed to see that that was not the case. Overall, the Mr. Market scoreboard showed about a minus 4% for the aggregate market cap, which is not so bad, and it was largely due to the significant outperformance of Ganfeng, which Rodney indicated as his top pick last year, and I was invested in that as well. Unfortunately, I wish I owned more of it than I did. But Ganfeng's not nearly as easy to trade as Livent is, available on Schwab, for zero commissions now. To buy Ganfeng, it cost about $1,000 per trade in and out. So if you're investing $50,000, that's like 2%, that you're giving in and out. You got to think I'm going to lose 4% just on buying that, unless you have kind of an interactive broker's account, which is a lot more cumbersome. We were right about air supply, Morgan Stanley being wrong about the supply coming from Chile, but there was a very significant increase in Shanghai brine supply, some 40,000 according to General Lithium, which nobody really had forecast. The big miss was kind of a 6-month one, in that I thought the trade war would be resolved by May, but it only got resolved about 6 or 7 months later. Last year was a market of 4 quarters, actually. If I look back at our podcasts and the optimism expressed by guests like Mark Calderwood and Ken Brinsden as late as May of last year, there was a big rally. I mean, Argentine brine stories, Neo-Lithium and Lithium Americas had done well, up through kind of March, April. So it came as a pretty big shock. And I asked Ken Brinsden at the Benchmark Cathodes Conference kind of what happened. This was in November. And he basically said, from June, July, the phone stopped ringing in China, right? It just kind of stopped. And that was, again, the impact of the subsidy change, and liquidity. As wrong as Morgan Stanley was on the air supply from SQM, they were right on many other topics, including the DNA of SQM to take advantage of being low-cost supplier, and they've re-entered the Chinese market, pressuring severely the Western Australian hard rocks. And finally, the huge surprise of the year was the political uproar in Chile in Q4. We had talked about no drama lithium power. I still believe that story is ripe to get their environmental impact statement done in the next couple of weeks, and there'll be a deal with Codelco. But the political stability of Chile being uprooted is a topic that we will be covering more later this year. We'll see how events unfold. They still have confidence that OECD country Chile, as opposed to frontier market Argentina, is going to be a more favored place for foreign investors to invest and should have a lower risk. And in my observations of Pinera and changing the constitution and spending more money, they have low inflation, they have a good fiscal deficit, so they have the means, they have democracy, so I'm looking optimistically at Chile and believe that the most advanced brine in South America, lithium power, is another very important first half story to watch. As we begin our second year together, Rodney and I pretty much sticking with the same format as we reach the Jane and George battery pack investors, focusing mostly on financial analysis, some industry commentary. We have Garrett Fueling here, but for the most part, listeners here are trying to find which companies are likely to be winners. We've had some success in the past in finding 3, 5, and 10 baggers, and that's very much a focus of mine, as well as commenting on some of the bigger cap names. We will continue to have interesting guests and interesting banter, but this podcast should be listened to in conjunction with both my Lithium-ion bull and Rodney's extensive notes on LinkedIn, as well as our commentary on Twitter. And we encourage you all again to support this in the future through the Patreon platform. Go to www.patreon.com/lithium-ion-rocks and strongly encourage you to donate whatever you can, $25, $50, $100. We haven't advertised this too aggressively, but it would be great, like Piano Man Tip Jar, if you all find value in what you're hearing, to contribute monthly what you can. And as we look toward Lithium 3.0, I quote Rodney, "It may take 60 years to reach the first 1,000,000 tons of demand in 2025, but expect the next 1,000,000 to take around 6 years, around 2030, 31. New assets will be needed." And in my view, kind of who's next, blue sky and green fields, with a 2030 vision, we need to think about 2 million tons of LCE is an incremental 1.7 million new tons. That's 6 times 2019 production, which is equivalent to 17 new Wodginas, or 65 to 70, 25,000 ton per annum new processing plants. I believe the United States can lead North America to 400,000 tons of annual production, which would equate to 20% of a 2 million global LCE market, or about a 33% of the EV OEM-qualified hydroxide, carbonate, and metal processing market. When I talk about North America, I'm talking the United States of America, Mexico, and Canada. Where will this 400,000 tons come from? I listened to Vivas Kumar of Benchmark Minerals eloquently analogizing a Manhattan project recently in relation to EV supply chains. The USGS just put out its critical minerals list, of which lithium was one, but quite frankly, I think abundant lithium is not so much critical as it is irreplaceable, as Volkswagen calls it. But the reference to a Manhattan project is constructive, as the USA's global lithium leadership through Albemarle and Livent started in North Carolina, mining and processing world-class spodumene for the hydrogen bomb. I see a history repeat with explosive Carolina tin spodumene lithium production growth, not only from the plain vanilla pegmatites in North Carolina, but also potentially importing from Brazil, possibly Sigma and AMG's lithium, as well as from Europe, possibly from Savannah and other hard rock deposits there, as well as Quebec. Conceivably, spodumene from Whabouchi could come down to North Carolina. The Manhattan project I reference, of course, is a NASDAQ-listed Piedmont Lithium led by New Jersey's Keith Phillips. Anyone who's heard Keith present knows how much he loves driving his Tesla Model 3. Regular readers of the Lithium-ion Bull know how much I love KISS, Keep It Simple, Stupid. Leonard Skinner features prominently in the Almost Famous soundtrack as the director Cameron Crowe got his start writing about the band in the early 70s. Big news towards the end of last year was GM and LG Chem announcing a joint venture for a $2.3 billion gigafactory in Michigan. And earlier this year, SK Innovation talked about expanding their Georgia plant and referenced the fact that they wanted to avoid tariffs and they wanted to be closer to sources of supply, expecting more Asian battery factories to come here. Volvo, owned by China's Geely, right after the signing of the trade deal with China, said they're going to create an electric version of its XC90 crossover in Charleston, South Carolina. By assembling the packs on campus, Volvo hopes to reduce shipping costs involved in transporting the heavy batteries. A Volvo built in 2025 will leave a carbon footprint that is 40% lower than a car we built today, said the CEO of Volvo. We've made safety part of our brand. We should do the same with sustainability. Benchmark Minerals this week put out a cathode tracking product, which I call critical cathodes, and it shows, like mining, but even worse, that the U.S. doesn't have very much cathode making here. So in order to be sustainable, America can very much have a closed loop from mining to chemical to cathode to battery to pack to EV. So attention, Umicore, which has their U.S. headquarters in Raleigh, North Carolina. Where are the cathodes? Volkswagen, why aren't you dictating to Umicore and SK Innovation, your other suppliers, that they build these factories here? When BMW is suggesting all of their hydroxide is going to come from Ganfeng, which is coming from Australia to China, all the way to Europe, and that being sustainable, it's much more sustainable if you have shorter distances for your supply chain. So to me, North Carolina is the most obvious place in the United States and North America to be producing high volumes of lithium hydroxide. And this is a story and a space that anyone listening to this podcast should focus greatly on, not only for Piedmont, but also over time. I believe Albemarle, which referenced they have 50,000 tons of per annum LCE from their Kings Mountain mine. With 2020 hindsight and 2030 vision, I believe North Carolina tin spodumene belt is like death and taxes, inevitable. One thing that is not obviously simple, but increasingly I believe we should kiss DLE, direct lithium extraction opportunities. So I'm bullish on Standard Lithium in Arkansas. I'm also bullish that Livent's investment in E3 will demonstrate success there. And there are other opportunities in the Salton Sea. An attraction for DLE projects, as we see it, is rather than needing $500 million to prove a concept, with $5, $10, or $20 or $50 million, you can determine whether or not a process and an asset is workable, and then it's a question of scaling out rather than scaling up, whereas other projects like clay, other non-traditional hard rock deposits generally require some $400 or $500 million to invest before you work out whether or not you can make battery quality product. So DLE in general, I think, is a lower risk, high return, but certainly speculative. Nothing's yet been proven, but it's definitely a space that we think is sustainable. And within America and North America, there are abundant resources there. And as I have traveled around and spoken to a lot of large oil prospective investors and others, I find increasingly significant interest in DLE, much more so than I do in other unconventional lithium projects. But I am bullish on clay. I mean, for the first 7 years of my 10 years marketing lithium companies, I focused exclusively on what is now called Thacker Pass. I was surprised and disappointed that Ganfeng didn't come in to partner there, but was pleasantly surprised when they came in to partner with Bacanora, which is the first half story to watch, in my opinion. Bacanora has indicated that Ganfeng, with their help, is looking at new costings for their feasibility study, possibly importing some equipment from China, and look forward to seeing that in the coming months. And hopefully they will successfully raise the capital and be in full construction in the next number of months this year. If they're producing battery quality lithium, then I believe Thacker Pass and other clay projects will attract investment. The greatest respect for the Lithium Americas team, John Evans and Rene LeBlanc, and all of those guys are great. They have never done anything like they are attempting to do with Thacker Pass, and just having marketed that story for a long time and in market again now with so many investors that I'm speaking to, from Big Chemical, Albemarle, Livent, have given me every indication that they don't have interest in clay. Big Mining, we'll see. Rio has been very slow, and maybe they'll do something in Jadar, but BHP and others don't seem to have an interest. And Big Oil, you got Schlumberger came into Pure Energy. I guess Chemical, you got Lanxess. I just think that Big Oil and other commodity chemical are more comfortable with liquid than they are clay. Ioneer, hard rock, boron, and lithium is probably the second project that is most likely in the United States to get in production. I noticed that they resolved their buckwheat problem, which coincided with the great Eddie Murphy being on Saturday Night Live, bringing back that great character, in addition to Gumby and several others. From Cinnamon Girl to Tim Horton Donut, Rockin' in the Free World was not one of the greatest hits from Neil Young's 1977 decade, nor, it turns out, for Lithium in the 2010s. But I see a battery quality hydroxide shortage and a price spike now much more likely to happen sooner and perhaps more acutely as a result of events in Quebec, as Northvolt, LG Chem, Johnson Matthey, and other Nemaska offtake partners will scramble to source more of their irreplaceable lithium from Chinese assets. Whatever operational difficulties they had, I still believe that the capital structure of that company is the most difficult part. When you have Tangxi in Kwinana having a similar type overrun, but very different cost of capital structure with their essentially state-owned Chinese backing, the companies like that don't have to kind of go into receivership or creditor protection. The year is starting with a potential refinancing at Altura. I don't know, maybe some of the debt holders in Nemaska who received quite a bit of their money may seek to redeploy into Altura. The best investors in lithium and Lithium 2.0 were secured debt holders. So if you look at Tribeca in Alita, they did very well. All of the debt providers for Altura, who got 15% interest rate, plus warrants and stock, and the Nemaska holders who never had to lend a dime but got 11.5% interest rate, all did fantastically well. So that's a lesson from Lithium 2.0. Secured debt kills equity, but secured lenders make a killing.
Happy 2020 to all the listeners of the Lithium-ion podcasts. Thank you all for your support during 2019. We look forward to a new year and a new decade, and it started off really well for lithium equities. We've seen a lot of the Australian listed entities having a rally in the developer space and in the producer space. Interesting as Livent has given some warnings, but I think markets typically are forward-looking, and it seems that a lot of the good news being released by the various OEMs is suggesting that sales could be on the up, and we're likely to see a continued growth in mega factory expectations and development, particularly in Europe. On that front, late last year, Northvolt said they could well potentially be looking at targeting 150 gigawatt hours of battery capacity by 2030, and suggested that they would be roughly 25% of that market. That mathematically suggests a market of 600 gigawatt hours, substantially higher than what Benchmark Minerals previously had in the 300s range by 2028. So it looks as if Europe is definitely taking it seriously. In 2021, Northvolt is looking to launch its first battery cell plant, and looking to grow that up to 32 to possibly 40 gigawatt hours in time. So Europe is definitely on the move, and there's also increasing talk of a carbon border tax, which is something that I've discussed, Howard and I have also discussed on various podcasts and in LinkedIn writing. It's highly likely that there will be some kind of a standardization and an evening up of the competitive landscape, where European companies are forced to comply with certain standards and other producers aren't, and therefore giving need and the need for a carbon border tax. So let's see where that goes. I think it will come in time. At the moment, there is a shortage, particularly on the battery quality lithium front for tier 1 batteries, so it may not be as pressing, but in time I do believe that some form of a carbon tax and a carbon border tax will be introduced. When, we'll have to see. There will no doubt be a lead-in, but it will most definitely come into play, I think. On the EV sales front, we're seeing Tesla do really well. There are certain fleet incentives that exist in Europe, particularly in the UK and Germany. We saw big Tesla sales and other EV sales in the Netherlands before the cutoff of the end of 2019, but those fleet incentives still remain in the UK and Germany, and that is likely to underpin more EV sales. An early launch of the Model Y. There's now talk about at some point when the Semi will be put into production, and I've seen various articles suggesting that the Gigafactory 1 in Nevada will increase its production capacity from 35 gigawatt hours to 54. We're seeing China ramp at the same time, and the German factory just outside Berlin for the Gigafactory 4 in Europe also coming into play. So all of these movements from Tesla, it's gone from the story to a story, back it seems to the story at the moment, although we will see other Western OEMs looking to meet the CO2 emission standards. But as mentioned in my article at the end of last year, is one has to take into account how small the battery quality lithium hydroxide market is. It really is. It's not big at all. We've seen VW and BMW do fairly sizable offtake, roughly in the region of 10,000 tons per year. You've already got Tesla with its existing contracts, and the Japanese and South Korean cathode makers. So I think that as Europe is on the rise with the battery factories, they are going to look, certainly Northvolt will be looking to secure its lithium, and I still believe that that is the first market to turn. Yes, the LFP market's having a bit of revival with BYD talking about a sort of 600-kilometer range and possibly even a 1,000,000-kilometer life expectancy on its advanced LFP battery. But in the tier one world, outside of China, you're definitely going to see the large OEMs picking up pace, and I think most definitely looking for hydroxide. When will that turn? It depends on who looks to secure what. A very strong start to 2020 in EV sales would be hugely helpful, as will a strong China sales with the now public announcement that the subsidies won't be cut again in 2020, or there will be marginal cuts, but largely left in place. There has been talk of an expectation of EV sales of 1.8 to 2 million in 2020. That's substantially up on the 1.2 in 2019, which was a drop from the 1.3 in 2018. So at anything around the 1.8 to 2 million over 1.2 would be a substantial rise. And, you know, given the sort of cash working cycle of Chinese manufacturers and producers, they will most likely now need to restock in anticipation of higher sales for this year now that they have that information. And I believe that is bullish, along with European sales. So there's been a lot of talk. Livent has been bearish, so have some other market commentators, but I think that it is possible that we will see inventory builds coming up in the near future to meet demand. Tesla's share price, nearly $500 a share, it puts them in a phenomenal position to do acquisitions or investments or joint ventures into other companies. And their battery day is looming. It's either next month in February or likely in March. And if they are aggressive, as they could potentially be, we could see another trigger in bull sentiment towards EV battery metals, and in particular lithium. Based on my models, which sort of vary in between the bulls and the bears, I still believe that they, as things stand, will be looking to target about 100 gigawatt hours of battery capacity by 2023. That's a meaningful lift on where they are now, and to my mind, that alone will need something in the order of 40,000 tons of lithium hydroxide battery quality on its own. So when will this filter through to the market? I'm hoping that it will filter through sooner rather than later as people look to tie in contracts. Given where current prices are, if they can find quality, they're going to be getting it at very good levels now. We shall see if Albemarle and others cave in terms of contract negotiations, or whether they ride it out. They do have the cash flows from their other non-lithium businesses, but it's a question of how they're going to play out in strategy. So we shall see. We look forward to speaking to experts. Some good news coming out of various different companies, but I do believe that carbon footprint and just in general sustainability of lithium production is a theme. I mentioned it last year. I think 2020, as people get serious about ramping up EV sales, it is going to become an issue. So companies that are focusing on new technologies and can get them right, I think, are going to be well placed. So if we look at outside of Australia, we are still confident of some of the conventional plays in America: lower cost, lower taxes, and an opportunity to have integrated production with which should have a relatively low carbon footprint. So lots to be excited about. Yes, we could see short term. We did see SQM with estimated sales of around 15,000 tons in Q4. Will they continue to sell lower quality material into China and suppress the market? We'll have to see, but we don't have a lot of production coming online from brine sources in 2020 or expansions. If anything, you could see more restrictions with that legal ruling against SQM, and we shall see what comes out of the Aussie producers into the China non-integrated chemical producers. I still believe that given where prices are at currently, they might be working a plan, but it's unlikely that they can sustain volumes with prices being sort of sub 8.5 doesn't make sense. So we'll have to wait to see when sanity prevails and volumes tip off. So it's going to be an interesting year.
Garrett, our last podcast was among our most popular, but there were a couple of questions that you had emailed me after the fact that you wanted to cover.
Let me start with the margins and cost curves. When we started to increase prices in 2011, we argued to customers who always came up with our pinpointing at the margins we made, that we need those margins in order to finance expansions, because capital markets were not really providing us the cash we needed for it. And I think if you are on the left side of the cost curve like SQM is or Albemarle is, then you have the margins which allow you to generate enough cash in order to finance this from an internal cash flow without needing to rely on debt or external other financing. These days, when the prices come back, it doesn't allow that high pace of expansion. So that's one reason why, for example, Albemarle is scaling back, aside from maybe the acquisition of Wodginas. So this is the reason why you need those margins, at least at the beginning of a cycle when heavy investments are needed and capital markets are not in favorable condition to support this. The other point, which is often neglected when talking about South America, is that even if it doesn't rain in the Atacama very often, it does, let's say every 10 years or so. And I remember a case, 2006, I think it was, when there was a rain in the Atacama and it didn't impact the brine production itself, but it washed away the infrastructure. So the roads and pipes and things like this weren't available anymore for a couple of months, and the market went short. So because the access to the Atacama is for SQM and Albemarle the same. And when you have heavy rains and infrastructure is affected, then it can also affect supplies from Argentina, which is going through through Chile. So it's one thing is the weather pattern. On the other side, there is another issue with weather. It's heavy, rough seas, which may impact shipping ex-Antofagasta port. This is a small port. I think I have mentioned it in one post or in a comment, where when the seas are rough, container ships just pass by because they simply can't enter the port. Most ports in Chile are private, and there's little incentive so far to increase or to increase capacity and invest. And there is only one company so far, that's SQM, which has an Iquique and own berth, where they can load their product onto ships. But all others have to rely on alternatives, which take time and additional cost. So these weather patterns, though not frequent, may impact production from South America. And in this sense, when you run an automotive factory these days, you can't rely solely on a production on that area. So you have to have both brine and hard rock. And the discussion, which is often taking place on conferences or in LinkedIn, it's often either or. No, it's not either or. It's and. Yeah? To cover the future demand anyway.
You haven't heard any bad news out of Albemarle in Chile in quite a while, right? So, and they referenced that in the investor day that silence is is a good thing because of what they've done there. So, do you sense that the political winds are in Chile? Albemarle versus SQM are more in Albemarle's favor now than they were?
Yes. The political favor climate is much better for Albemarle these days, yeah, definitely.
Right. SQM has been very clear about ramping up volume as much as possible, indiscriminately.
Yeah, they have ever done, yeah? They have done this. They have done this all the time, but where are they ramping up? They always talk about 60, 70,000 tons. We haven't seen anything higher than 50,000 so far.
Well, Q4 was 15,000, so that's a 60,000 run rate if that's sustainable. So that's
if it's sustainable, yeah.
Right, but
that's also Q4, which was the highest evaporation rate. So we'll see on a year-by-year basis.
Yeah, and you don't know how much there has been on stock somewhere, no? Or Yeah, so it remains to be seen. So if they can maintain 15,000 tons the next 2 quarters, I believe in the expansion. If they don't do it, I don't believe it, unless I have seen this figure.
And Gerrit, just as a question, my understanding that the battery quality hydroxide market is actually much smaller than one thinks. And we've seen VW and BMW sign term contracts with Ganfin. You've got Tesla that's already has its existing contracts and now looking to launch the Model Y early and potentially expand the original gigafactory from 35 gigawatt hours to 54, and China expanding. When are we likely to see? And Northvolt's also coming online. Their first battery cell plant is coming online in 2021. Surely we're going to see battery quality hydroxide, unless there's some surprise growth I'm not seeing. A lot of that's going to be spoken for in the near future.
This will depend very much on a number of factors. So what kind of cathode materials are going to be in there? And there is a mix, and this makes it difficult to predict. That's kind of a question mark in that sense. So hard to predict.
But Tesla is all hydroxide, is it not?
That's all hydroxide so far, yeah.
And they're looking to launch the Model Y early. They're talking about the Semi coming out in 2021. So they alone, look to possibly need 20 to 30,000 tons of hydroxide additional in the near future, which on its own surely is quite a stretch. Tesla's battery day is going to be a big moment, I guess, if they are going to make a major move forward. And in terms of Gerrit, in terms of this Chinese subsidy now going to stay largely the same this year, that potentially brings, I hear different forecasts, but 1.2 was the final 2019 number, give or take. I'm hearing 1.8 to 2 million. Is that good news for carbonate then?
At the end of the day, it's good news for the lithium market, no? Whether it's carbonate or hydroxide.
Yes, fair enough.
Yeah, so we see it from the LCE standpoint. So it's good for the carbonate, but the carbonate for EV batteries has never been at the level of what we see now for 550 or 6 or 7 or whatsoever. Yeah? So the thing is, if you have
not what's going to South Korea and Japan, no.
No, certainly not. And even in China, it's a bit higher. So it's not on that level. Yeah? So if you have an oversupply on the technical grade markets, the prices will stay there for the time being. Yeah? Unless you find somebody who has set up, that some cell producers in China do, a bicarbonate conversion, a bicarbonate plant for purification of technical grade carbonates to get better qualities out of that.
How prevalent is that?
I know at least 2 sites or 3 actually, who have a purification facility.
And what sort of volumes in terms of tons?
10 to 20,000. Up to. This is expandable, so the investment is not that high. Maybe 2 or 3 million, and you can get such a facility for 5 to 10,000. If we look at South America, Neolithium, they are planning their conversion facility not at the altitude where the ponds are, but on a lower area, 1,500 meters or so that the purification over there should be easier. It's at altitudes of 4,000 meters, the thing precipitates, bicarbonate precipitates. So that's why it's not advisable to make a conversion at this altitudes. You can do this, but it requires a different technology.
Europe's now talking about a carbon border tax. So, by the looks of it, hard rock is definitely more CO2 intensive, has a bigger footprint than brine. If Europe is going to look to neutralize the impact, then what can be done to sort of mitigate?
The only thing you can do is minimize energy consumption or generate power you need by solar or wind power. It's mainly the conversion plants affected.
Yes.
Yeah. So if you transfer a conversion plant in Australia, okay, you have enough sun. You may generate power from solar cells. The same in Europe. You could add wind power, maybe atomic power, although this is not very... It's difficult. This is publicly difficult to install. And in Chile, in the Atacama, in the desert up there's probably the way to generate also wind power and solar power.
Direct lithium extraction as potentially sustainable and also scalable, but nothing's been commercially done yet. So this is a number of years kind of in the future. I'm with you on it's not either or, DLE, hard rock, clay, or brine. It's invest in everything. But how do you think about that? I mean, you're German, and Germany. BMW said that they have all their offtake taken care of with Ganfeng, which is hard rock to coal-fired China, and they're saying that is sustainable. I think they're saying or contrasting Australia crushing rock to DRC cobalt with potential child labor issues. But sustainability is a very big buzzword. What do you think of all of that as we think of trying to very aggressively scale out this European battery production and the need? Albemarle is talking about hard rock being the workhorse for this for the foreseeable future. But if that's biggest carbon footprint, what does sustainability mean? Carbon footprint versus other attributes?
It's going to be a compromise. So if you don't have conversion plants in the West and you only have them in China, and these things are operated by coal, then what are you going to do if you want to produce electric vehicles? There's no other choice. You have to rely on these guys, unless you set up conversion plants in Europe or in the United States, which are powered by different means.
This debate will no doubt continue as the Roaring 20s begin, and with 2030 vision, with 65 to 70 new conversion plants of 20 to 25,000 needed to meet 2 million tons of LCE supply. I believe we need an all-of-the-above strategy. Sustainability is not just carbon footprint. It's fragile ecosystems, indigenous people, flamingos, ecotourism, dry deserts with not enough water, heavy rains with too much water, High altitude, high inflation, sovereign risk. It's not just a global industry, it's a global emerging market industry with lithium supply coming from not the most stable countries in the world. Supplying the disruption of the most important industry in the United States and Germany and other European countries, Japan, Korea. Security of supply is as important as sustainability of supply. In Lithium-ion Rocks, Lithium-ion Bull, and through our respective LinkedIn and Twitter posts, Rodney and I may share with our audience some rationale for a stock for which we have conviction, to own or not to own. If you agree or disagree with and act on or against the rationale of anything said or written in this or any other Lithium-ion Rocks or Lithium-ion Bull, that's your free choice. But to be clear, what you are listening to or reading is not investment advice and may not be unbiased. It should not be construed as an investment recommendation to buy or sell any security. Rodney and I are not registered investment advisors nor broker-dealers. Please visit libull.com for further disclaimers.